In 2021, the top 25 US billionaires paid an effective federal income tax rate of about 3.4%. A school teacher pays around 20, and 9 of the 12 European countries that ever tried a wealth tax abandoned it. So should the ultra rich be taxed out of existence? Yes and no at the same time. 5 minutes, both sides. What the tax filings, the flight data, and the constitutional rulings actually say. A verdict that punches both the eat the rich crowd and the taxes theft crowd in the same dinner. Chapter 1. The case for because a level of wealth concentration this extreme has never coexisted with a functioning democracy. Start with the pile. The top 0.1% of US households own more total wealth than the entire bottom 90% combined. That gap kept widening every decade, since 1980. It's now bigger than at any point since 1929. Then the effective tax rate. ProPublica leaked IRS files in 2021. Bezos, 0.98% over years. Musk, 3.3%. Warren Buffett, 0.10%. Meanwhile, median income American, around 14%. That isn't a rounding error. That's a design. The historical anchor. In 1955, the top US federal marginal rate was 91%. Yes, you read that right. The economy still boomed. GDP tripled between 1950 and 1975. High top rates and rapid growth coexisted. The lobby that says otherwise is selling something. And here's the democratic problem. Extreme wealth doesn't stay economic. It buys media, it buys lobbying, it buys Supreme Court rulings that increase its own influence. Post-Citizens United, political spending by the top 100 donors is up tenfold. The money never sits still. Chapter 2. The case against. Because every country that has actually tried a broad wealth tax has run into the same 3 walls. The European graveyard. In 1990, 12 OECD countries had a wealth tax. By 2020, only 3 still did. France abandoned theirs in 2018 after losing an estimated 42,000 millionaires. Sweden, 2007. Germany, 1997. The story is remarkably consistent. The Norway example. In 2022, Norway raised its wealth tax. Within 2 years, roughly 70 of its wealthiest citizens moved to Switzerland. Cumulative estimated capital departed over $54 billion. In a globalized world, the ultra-rich are extremely mobile. The valuation problem. Most billionaire wealth isn't cash. It's shares in a private company, or a public one they can't easily sell. What's it worth? The IRS values differently than the founder. Every appeal becomes years of litigation. The administration cost is real. The Elon Musk exhibit. In 2021, after years of near zero personal tax, he sold Tesla stock and paid $11 billion in federal tax. Single year. Largest tax bill in US history. The current system does eventually collect. It just waits until the founder chooses to sell. That timing is a leak. And the innovation risk? Real. Founder wealth funds, long shot R&D that public markets refuse to. SpaceX, Neuralink, Andreessen's biotech. Not every founder is Musk, but the class of concentrated capital has empirically funded moonshots that quarterly earnings capital doesn't touch. Chapter 3, what actually changed, because the way the ultra-rich pay tax now barely resembles the system the law was written for. Meet the buy, borrow, die strategy. Step 1, hold appreciated stock, never sell. Step 2, borrow against it, spend the loan tax-free. Step 3, die, heirs get stepped-up basis. The lifetime gain vanishes. The treasury collects nothing. Millions of tax lawyers keep this legal. And the fight got framed wrong. Wealth tax versus no wealth tax became the vibe war, while the actual leaks, capital gains, loopholes, it carried interest, step-up basis, carried on collecting nothing. The slogan is politics. The plumbing is the actual policy. Chapter 4. The verdict. The answer that infuriates both the tax them into the ground crowd and the taxes theft crowd equally. Both are true. Extreme concentration is a democratic emergency. Pretending otherwise is delusional. And broad wealth taxes have failed 9 times out of 12 in the real world. Pretending otherwise is delusional too. Both slogans are wrong. The actual answer is unglamorous. So stop asking, should billionaires exist? Ask instead, why does capital income get taxed lower than labor income? Because that gap is where the entire game lives. Fix that gap, The concentration problem eases. Don't fix it. No wealth tax will save you. 3 rules. 1. Minimum effective rate for the ultra-rich. 25% floor, regardless of how income is structured. Biden proposed this. It works. 2. Kill the stepped-up basis at death. That single loophole erases the biggest gains untaxed. 3. Treat borrowing against appreciated stock as a realization event. Buy, borrow, die becomes buy, borrow, tax. Switzerland has a wealth tax and remains a haven for the rich. Denmark taxes wealth at about 1% and stays wealthy. The concept isn't broken. The design is where every attempt lives or dies. Rate too high, flight. Base too narrow, no revenue. Enforcement too weak, pointless. Details upbeat slogans every time. Be specific. Name one tax loophole you know about, that you personally use, and one you know the ultra-rich actually use that most people don't. Both. The pair is the picture. Subscribe, new question every week. The honest answers nobody in either tribe will give you.